Perfect. Good morning. Thank you so much for joining us today. In order to strengthen your company's financial position, business owners should know the importance of cash flow and how it impacts their business. In this presentation, we will explain the importance of the impact of cash flow, to complete a cash flow template, and give an overview and examples of cash flow issues and opportunities. Before we get started, we would like to give a quick introduction to let you know who we are. My name is Kellogg. I'm an SBDC business funding analyst with the Maricopa SBDC Center. We're a resource for small business financial literacy. We help guide, educate, and support business owners to be financial leaders of their business. Before the SBDC, I worked with JP Morgan Chase for almost 10 years, working in the lending world and with small business. And prior to that, I worked in managing businesses with the Limited, which is Victoria's Secret and Bath and Body Works. I alternated between the two divisions for about 14 years. We moved to about 7 different states. Finally, about 13 and a half years ago, we called Arizona home. I do have a passion for helping business owners flourish and know the sacrifice and dedication it takes for business owners to succeed. I'm really happy to be a part of the discussion. So thank you so much for having us. And CJ, tell us a little bit about yourself.
Well, good morning. Thank you all for taking time out of your busy days to sit with us and learn a little bit more about what the SBDC can do and what cash flow management is all about. I have been with the SBDC for about 1.5 years now, and prior to that, I was a commercial lender for many years, done lots of different kind of lending, including SBA and 504 loans. As a lender, I would utilize the services of my local SBDCs frequently because they just help make my job so much easier. And I really value the additional resources that they would provide my clients at that time. Now I'm on the flip side. Now I'm an advisor with the SBDC and I'm loving it. So thank you for having us this morning.
Thank you, CJ. Before we get started, I guess we should probably tell you a little bit more about the SBDC. The Maricopa Community College's Small Business Development Center is part of a powerful statewide network, America's SBDC Arizona, which is accredited by the nationwide America's SBDC. America's SBDC Arizona is funded through a cooperative agreement with the U.S. Small Business Administration and hosted by Maricopa Community Colleges. We do enjoy the productive partnerships with the City of Peoria and Arizona Commerce Authority. Our Maricopa SBDC mission is to guide, educate, and support business clients, from pre-venture clients who simply have an idea to businesses starting out, as well as long-standing existing businesses. Our No Free Counseling focuses on helping you launch, grow, and sustain small business. Our team of business analysts have experience in many industries listed here on our slide. We have experts in funding needs, export and international trade, technology, marketing, manufacturing, that's just to name a few. The Maricopa SBDC offers research and training programs such as what we're doing today, and with access to tools and resources with business development. We have great relationships with lenders also. CJ and I are both business funding analysts, so we have an understanding of what lenders are looking for. There's usually a long list of financials. If you guys have ever done lending before, you know that there's a list of long financials that is part of how we help our clients get prepared. We help put together a lending package that's appealing to lenders and help make the lending process just a little bit less stressful for everyone.
Yeah, our discussion today is to help businesses by supporting your efforts in understanding and utilizing your cash flow. These efforts should have a positive impact on your business. Please keep in mind that this information is in no way legal or investment advice. We're not attorneys nor CPAs. Today, we're going to go through cash flow, how to manage it, and become financial leaders in your business. Cash flow problems are just one of the leading causes for business failure. These problems can stem from any one of the following. It could be cost management, inventory, how you are working with your cost of goods and the pricing of those. Your debt utilization, is all your capital tied up in loans and you need to raise some capital. And then your cash position and cash reserves. Knowing your cash position is a vital part of running a successful and profitable business, giving the business the ability to maintain cash reserves. We will go over each of these throughout our presentation and in our financial toolkit. Some of the additional no-cost resources that are available to our clients are represented on this slide, such as Growth Wheel. Growth Wheel is a visual toolbox that is cloud-based platform, is used by business advisors to help entrepreneurs and growth companies make decisions and take action. It focuses on specific aspects of your business as your needs are determined. LivePlan is an online platform which produces business plan that follows an SBA approved format. LivePlan guides you through a simple process for building accurate financial forecasts and reports for your business plan. And it allows you to import the data that you already have stored in perhaps QuickBooks, Xero, or maybe just an Excel spreadsheet. LivePlan also provides you with a one-page summary pitch of your business that defines your strategy. It's fast and simple and a more effective way to document your business ideas. ProfitSense is a web-based financial analysis software suite that us advisors use in conjunction with you when you're doing your accounting, converting over sets of accounts into customizable reports, explaining the company's financial health relative to the past and to your peers. It also has the ability to provide key metrics for establishing business valuations. The SBDC Net provides market research services to the entire SBDC network. When you work with an SBDC advisor, you have access to numerous research reports, such as IP protection, that's for intellectual property, trademark, copyright, and patent information, market analysis, and your competitors' information. All of that is extremely valuable. And the last thing on the slide is the IBIS World. It provides trusted industry research on thousands of industries worldwide. Their in-house analytics leverage economic, demographic, and market data, then add analytical and forward-looking insight to help organizations of all types make better business decisions. Today, we'll have 4 sections that we'll be discussing. In section 1, we'll go through cash flow management definition and its steps, and then we'll touch on the SBDC's guidance of that. When it comes to business financials, the business owner typically falls into one of 3 of these mindsets. They're proactive. That means that they're consistently knowing what their status of their cash position is. Or maybe they're reactive. They spend their time putting out fires and looking only at portions of the business, such as focusing on sales, but they're ignoring their COGS, which is also their cost of goods sold, or perhaps their operating expenses. The third, they are inactive. Their mindset is one of detachment because they have people to do the books. They just sign the checks. And here we're going to take a quick poll. Laura, I'll let you go ahead and take it from this portion.
All right, everybody, we're going to be starting a quick poll. Let's find it. And our presenters, CJ and Amber, would just like to know who here has used a cash flow template before. We'll give you a few moments to answer that question. Just a few more seconds. All right, and we're going to share those results with our presenters. So it looks like about 50% of your audience today has not used a cash flow template. Around 13% are not sure, and 38% have used one before.
All right. Well, then that means y'all are in the right place here. That's a good thing.
That's awesome. Well, as you know, as a business owner, it's important to proactively know your profitability, your cash flows, and know how to manage it consistently. So we're going to show you a couple of things today. Companies with higher cash flows tend to have more reliable business models, and they also tend to have fewer problems when it comes to funding their business needs. Cash flow does vary from industry to industry. There are different rules for industries as well. This will be a high level quick look to give a better understanding of the health of your business. And we do this by looking at cash flows, looking at the trends of the cash flows from operations, you see here, investment activities and financing, the correlation of your cash to your earnings, to your net income or earnings. The following are components of cash flow. In yellow, it's operating. This refers to the day-to-day overhead expenses such as payroll, utilities, office supplies. These are not investing or financing activities. That's just operating. Investing, you see in purple. This refers to long-term assets that may be considered for acquisition or disposal, which are not cash equivalent. What is in pink is financing. Means that the activities incur business debt, whether it's long-term or short-term debt. The activity has an impact on the equity of the business. Remember that cash flow management process needs to be completed on a consistent basis, not just during a recession or pandemic. So this is very relevant for us right now, but if we can move to the next slide, please. Thank you. As a small business owner, CJ just kind of showed us that not everyone is excited about financials, and it's not very an exciting topic, but we may not enjoy the financial side of tracking the numbers, but knowing your cash position is a critical data point that you need to manage your business, which I hope is why you're here today. We have been talking about a financial toolkit. We're hoping that we help prepare you to build your financial toolkit, as this should be a part of it. It helps check again the health of your business, as I mentioned. Today, we're going to help you add these tools to your toolkit to be a better financial leader of your business. By the end of our cash flow session, hopefully you'll get to know your cash position consistently. You'll be able to spot trends. You'll identify and overcome financial weaknesses, and we'll help you prepare for your goals. And guess what? It's okay if you're not sure how to do any of this, because as we stated previously, Maricopa SBDC's mission is to guide, educate, and support all of our business clients. We help you review statements, provide feedback, and assist identifying issues and opportunities, help spot trends to be aware of, as well as guiding you through those action plans towards a positive cash flow. Next slide, thank you. We're going to move on to section 2. This is how to complete a cash flow template, what tools to use to calculate your company's current and projected cash flow position. Keep in mind, there are a ton of different cash flow templates. You can Google it and you'll see a whole bunch. But today we're just going to show you a basic one that's not a lot of fluff, but it's just a basic one, easy to use. Some of us panic when we see these templates. So just understand that there's a lot of them out there. Each of your different industries will dictate what kind of revenue or sales versus service. There's different line items called chart of accounts for your cost of goods or cost of services. That will vary, as well as your operating expenses will vary from industry to industry. So we're just going to give you a high-level overview of a basic one. The consistent part about all of this to keep in mind is just the math itself. And we'll go over that as well. Here's the math part. The first step is understanding the math. So we have to learn how to calculate it. Nobody panic. We're going to make it through. It's very simple. So you need to just use your financials to support this calculation. So when I say financials, I mean your income statement, your income and expense statement, otherwise known as your profit and loss, or your P&L. All of those terms are synonymous. We're going to continue to say that throughout our presentation, just to reiterate the fact that expense statement, income and expense statement, profit and loss, and P&L is all the same thing. And then we'll also need your balance sheet. Some of you may already know that this calculation, but we're going to take a quick look. before we move on to spotting trends, just so we can remember what the calculation looked like. The calculation is cash inflows from operating, cash inflows from financing and investing, minus the cash outflows from operations, financing, and investing. That equals our net cash flow. So it's a simple calculation, lots of words, but it's a simple calculation that gives us the net cash flow. Cash flow is the inflow and outflow of money in our business. Remember, kind of like a checkbook, like CJ said. It's necessary for all of our daily operations, taxes, purchasing inventory, paying employees, and operating costs. Positive cash flow indicates that a company's liquid assets are increasing. A negative cash flow, obviously with negative connotation, cash flow means it indicates a lack of liquidity. Keep in mind too that there are two accounting methods that are used when we're talking about this: accrual basis and cash flow basis. The main difference between accrual basis and cash basis accounting lies when the timing of the revenue and expenses are recognized. That sounds like a lot of words, but basically the cash method is more immediate, while the accrual method focuses on anticipated revenue. So simply put, cash basis is when the cash exchange hands. So when you have the money in your hand, that's a cash basis. Accrual basis is when the accounts, the income or expense, when it's incurred. And I like just simply think billed in one cycle and collected in another when you're thinking accrual basis. We mentioned cash flow is looking at the trends of each of the cash flows. The correlation of cash flow to your earnings, the process of assessing and reviewing your net cash flow minus your receipts of your net cash expenses in order to optimize your cash position. It's tracking the money coming in and coming out. CJ will discuss the tools that we need to calculate the cash flow, but I wanted to make sure that you kept in mind that each financial document that we talked about that you'll need tells a different story and the timing for each document. One of the biggest takeaways though is that the balance sheet should always balance. We'll reiterate that a couple of times as well.
Yeah, we're going to say that a lot because we run into that a lot.
Yes.
All right. So here is an example. It's a simplistic view of a balance sheet and how it's basically split in half. We have assets on the left and the liabilities on the right. And I want you to pay attention to the cash line item. I put a star by it. It plays a key part when we look at the cash flow worksheet later on in this presentation. So keep in mind that cash line is important. Not necessarily that dollar amount because we use different examples, but it is that actual cash line. And remember that the balance sheet is a snapshot of a given point of time, and it's a cumulative data from when you first started your business. And again, it has to balance. When you provide the balance sheet's historical information for an entire year, it's called a pro forma balance sheet. If you are not in business yet and you are giving estimations, it's called a projection balance sheet. Assets, some of the common line items, and it's also, besides line items, are called chart of accounts. In the assets sections, could be cash, it could be accounts receivable, and that's who owes you money. It could be inventory or prepaid items such as rent and insurance. It could also carry your land and building or equipment, vehicles, those type of things. The liability section, it would hold your accounts payable. That's who you owe money to. Current liabilities, and current means any payments that are being made within a 12-month period. And then there are loans and other long-term liabilities. And long-term liability means any payments that are beyond 12 months. And these relate back to some of the assets that we just mentioned. Here in the equity section is where you'll see the amount of capital that's left in a business. Capital comes in the form of capital that's being paid in. That's where you and your partners perhaps have paid into your company, maybe starting it up, or throughout the business you've added more capital into it. It could also cover common stock and dividends, and that's primarily for corporations. And then lastly, we have our equity section holding the retained earnings. And what that represents is the it's accumulated over the lifespan of the business, but it represents how much money the owners are leaving in the company to keep it running. And a negative number in that retained earning is never good. Another tool that we use with our clients, and a document that lenders use in their loan packages, is called a schedule of liabilities, or you may hear it called a debt schedule. The data that's within here is also found in the current liabilities and long-term liabilities section of your balance sheet. And when you meet with your SBDC advisor, we will ask you about this information in order to consider if maybe debt consolidation may be in the best interest of your business, because perhaps it'll free up some of that monthly cash flow. Here are two different industries, their P&Ls. The line items or the chart of accounts between industries have some similarities. However, the differences will be based on what you want to track specifically. And I want to apologize, some of these images are a little bit small, but you can get a copy of this slide deck after the presentation is finished. So we'll make sure that those are available to you, and then you'll be able to look at this more closely. So depending on what you want to track specifically, here on the left, this construction company, well, maybe they want to break down their revenue by each job type, you know, what they're doing, residential versus commercial. If they do, then perhaps they will also match their COGS, or cost of goods, to the specific revenue source as well. So the P&L on the right, though, shows more common types of line items that are found with most businesses. And like I said, these are just samples, just to kind of get you familiar with the tools. Now, looking at this monthly profit and loss pro forma statement, also known as a P&L or an income statement, for an entire year, there are three areas that we have highlighted: the gross income, the total expenses, and the net profits. And the net profit on a P&L isn't the same as a cash flow statement. And I want you to understand that these look very similar. This P&L pro forma looks really close to a cash flow pro forma, but the items and the way that the calculations are done are really different. Let's see, the thing that helps remember the difference between the two is that the cash flow statement, the operative word, is cash. So everything is about cash, it's not about credit. And just remember, like we said earlier, that the process is like using your checkbook or bank statement: cash in, cash out. And we're going to walk through a scenario right now with a sample company called Like New Carpet Cleaners. Here's an example of a cash flow statement. Think of this as your checkbook or bank statement. It is to show what cash is coming in and going out. And what's the difference between the cash flow statement or pro forma statement? Well, I kind of already told you, but I'll go over it again. It says the net income from the pro forma statement provides information on profit earned rather than the cash that's generated. For example, if a business sells a product to a customer, it recognizes the revenue and the product is transferred, even though the payment won't be received until 30 or 60 days later. Products and services that are delivered by your business but are not paid for yet are found in your accounts receivable. This section of the cash flow statement is about the revenue. This section is about the various expenses. These are cash expenses that have been incurred with your business. And here is the last portion of it. It's called the net cash flow with the cash balance. And this reveals that this business's cash position. And this is an indication of how much actual cash is generated and therefore available to be paid out to investors in the business or maybe to invest in new projects. Keep in mind that profit does not equal cash flow. You can't just look at your profit and loss statement and get a clear picture of your cash flow. To reiterate what you will need in completing the cash flow template, you'll need 12 months of bank statements, the end of year balance sheet, and 12 months of P&L plus a debt schedule. Under some circumstances, bringing your accounts receivable report or your accounts payable report are necessary. But for this presentation, we're keeping it very high level and only dealing with cash basis. Accounting is an operational requirement for all businesses. It does far more than just evaluate sales, cash flows, revenues, and other financial dynamics of a business. It also plays a pivotal role in calculating and predicting future growth. The ability to track your most important assets, liabilities, receivables, and payables allow you to make sound business decisions for the future based on the metrics of the past. Here is a basic cash flow template. There are many accounting systems out there to choose from. You probably heard of some of these like QuickBooks, Quicken, Xero, Zoho, etc. If you're considering using QuickBooks, our clients receive a significant discount for it. Please let your SBDC advisor know that you are interested in that discount. Here on this template, the left column should contain the cash activity from operations, investing, and financing. It's important to note that the cash flow statement is very different from an income statement and balance sheet because it does not include the amount of future incoming and outgoing cash that has been recorded as credit. That comes into play with that. They bought it, but they're not paying you until 30, 60 days later. And so that's not cash basis. However, how can I say this? Therefore, the cash is not the same as net income. The income statement and balance sheet include cash sales and sales that are made on credit. Those transactions would also show up on your accounts receivables and your payables. The start sale and the beginning cash balance is taken from your balance sheet. If you recall back when I showed you that sample and I said, keep in mind that one line item, it's taking that dollar amount is where you start on your cash flow template. That's where you would insert it there. Cash flow refers to the difference between a company's cash in and cash out in any given period, resulting in a cash balance. Keep in mind that profit does not equal cash flow. You cannot just look at your profit and loss statement and get that clear picture. I said it before, and that's why I'm repeating it again. It is not the same thing. They kind of look the same, but they're not.
Thank you, CJ. That was a lot of great information. Now that we understand the cash flow, what cash flow is, what tools we need, how to calculate it, let's move on to section 3. This is where we see how to compare similar companies and then troubleshoot cash flow opportunities to improve cash flow. We need to first ensure that our industry code is correct. That's the only way we're able to compare. It's because we need to be able to compare apples to apples. In order to do that, there's some tools to help us see how we're measuring up to compare industries. So you make sure you have that competitive intelligence to your competitors. To check the industry code, we use the NAICS code, or you may have heard it called the NAICS code. This is the Northern American Industry Classification System. That's a very wordy title. That's why they just call it NAICS. The website here is listed for you to just jot down, but CJ said earlier, we'll be able to give you the slide deck, so you'll be able to do it. Honestly, if you just Google NAICS codes, it will come up as well. But once the code is correct, we can dive into how we compare with your competitors. It's a little bit different when you go to that website. You just do one word. So if you're consulting, you do consulting. If it's construction, you put construction, and you kind of have to filter through what best suits your business. That's important because we need to make sure that we're, again, comparing apples to apples. So make sure that you take a look at that. You can, how does your business compare? How does it measure up to other businesses in your same industry?
Yeah, and if you struggle with trying to find the correct code, ask your accountant, because they're the ones that put that coding on your tax returns. So, and if they're not being helpful, give us a call too, and we can help run you through it.
And the NAICS code has a huge, thank you, CJ. The NAICS code also has an impact on so many different things. The lenders want to make sure that your NAICS code is correct to make sure that you're not a prohibited business to where they could not lend to you. It makes difference in taxes. There's a lot of different things. Merchant services also want to make sure that you have the correct NAICS code because there's certain industries that are higher risk than others. So there's a lot of reasons why we implemented the NAICS code into here to make sure that we're measuring up as well. Shown here are two of our tools. We talk a lot about tools, our financial toolkit, and I'm all about having the right tools. Shown here are the two tools that we use to show comparison to our business. CJ spoke a little bit earlier about all the tools that we use here. We're using two just for our carpet cleaning business. We show the comparison to other businesses in our industry. This is to make sure that we're comparing ourselves to the same industry. Remember, that's why we're doing this. The first image on the left is a graph from IBIS World, using our carpet cleaning business as an example. As we can see, there are quite a few benchmarks that are listed. Again, we know that these visuals are a little bit smaller, but as it's a big screen, you'll be able to see it a little bit better. But the top three, because it's color coded, the top three color coded ones are wages, other costs, and purchases. So I would tell you to take a look at those first to make sure to see how you're measuring. These benchmarks are to be held as a standard for your industry. So look at the different benchmarks and to see where you're measuring compared to them. Even if it's just taking a look at those three, let's just ask ourselves, where are we in comparison, and what areas can we do better? And that's really what the whole concept of this exercise is just to see where we compare and where we need help in. It's important to know because your return on investment, we talk a lot in the lending world, but your return on investment or your ROI, we want to make sure it's worth the cost. If you're spending a lot of money on marketing but not getting the right return on investment, we want to make sure we adjust that. Same with payroll, or same with if your rent is too high, maybe we could find another place. So that's why we do a lot about this industry standard. The next image on the right is from SageWorks. This one is shown in ratio formula. Everybody learns differently. Somebody likes pretty graphs, somebody likes the math. So I love that there's different tools for us to be able to choose from. But the ratio format allows you to see year over year. It just gives you a snapshot of how your performance has grown or decreased. For example, we can see how long it takes for accounts receivable to come in, how long it takes for inventory to turn over. If we don't see improvement, obviously that's our goal, right, is to see improvement year over year, then we know that those are areas we need to put an action plan in place. And of course, working with us at the SBDC, we help you access these tools that you see here, and then we'll walk you through comparing your own financials. And again, just remember, your financials are only good as the data that's put into it. So it does take some work on your part to make sure that you're inputting the appropriate data into your financials. And obviously, if that's not something you do, if you have people that do that, as a business owner, you still should know where your finances are, and the person who's doing your books should give you a moment to walk through those with you so you have an understanding and you're an educated business owner.
All right. I wanted to show you all a feature that's within LivePlan. That it's very useful and it's very fun. And if I could have incorporated doing an actual like a show and tell of the platform active, I would. So maybe on the next one, but technology and me, we're not always best friends. So I'm just going to show you some of the screenshots from it. This is very useful. It allows the user to see real-time cause and effect on cash flow as you adjust your accounts receivable. This section, I have it blown up a little bit. On the live plan, it allows you to go in here and move these arrows wherever you want. And as you do it, you can see the cause and effect on your cash flow. If you lower how many days it takes to get paid, then it's easier. I mean, you end up with more cash flow to utilize in the day-to-day business. The next section has to do with your accounts payable. So if you're taking time to pay what you owe out to your other providers and where you get your inventory, those type of things, you can navigate this back and forth and see what that cause and effect is on it. Same with the days to pay. You can bump it out even a week. It causes a real ripple effect on your cash flow. And then this last part is on inventory, and that's the turns on inventory, how much you have in-house right now. If you have different quantities that you want to order at a certain time. So with this live plan, you're able just to go in here and play with it. And then you can actually save the sample of what you did in there and then call it something special so that you can kind of play with it and say, here, if we do these type of things and make these kind of changes, then we're able to see these bottom line effects on our cash position.
I think that's such a cool tool that we're able to use, because when we're talking about the slide before, we were talking about, gosh, what do we do if, we have our inventory for too long? That tool allows you to play with it to see, what you can do with that. So I think that's pretty cool. Here, we're just going to take a closer look at kind of what CJ just showed us on the Performa cash flow. You'll see the snippet is kind of a screenshot of what she used. It's from the live plan showing a 12-month rolling net cash flow and cash balance. I was using this little snippet just to kind of see, you can look at the first 4 months I highlighted in red to show that they are negative. And we definitely need to stop and pay attention when we're in the red. And CJ said earlier, negative is not good. So we want to make sure that we pay attention to that. Just to walk you through, again, the math really quick. The calculation shows the beginning with $24,446 the first month, and the second month having that deficit of $6,703. Obviously that calculation, so 24 minus 6 is 17,743 for the end of the second month. And as you see, it just continues. So the third month, you minus the 4,900, it gives you 12. You minus the 26, it gives you the 10. It's not until the fifth month that we are what we call breaking even. Even though we're not negative, but we're just a little positive at $150. We call that breaking even. But you don't see until finally the sixth month, where we've highlighted in green, that we see a positive cash flow. And that first month there is $36.52. Even though our cash balance is down to $13,988. We're still looking for that green highlight, that positive cash flow, because we want to make sure that we're having positive cash flow improvement, because that's kind of what our goal is. So that's kind of a quick calculation. Red light, green light. We want to make sure that we stop and pay attention to the negatives, and then the green light means we're doing pretty good. And of course, in my mind, I'm like, okay, this is good, but what does better look like, and what does great look like? So knowing what we can do using that tool that CJ told us in the slide before, like how can we be great in it? Please keep in mind that the positive cash flow occurs when cash is coming into the business. Again, that's from sales, accounts receivable, etc. is more than the cash that's leaving the business. So again, cash in, cash out through through business accounts payable and monthly expenses, salaries, that kind of thing. Negative cash flow occurs when the outflow of cash is greater than what's coming in. Again, I just said we need to make sure it's going in green and not negative, because it generally spells out trouble for the business. And there's steps that we can take to remedy that situation, or to collect more cash while maintaining or cutting expenses. Having a plan in place is vital. You can see that it's important to make sure that you have a plan in place, and we have the tools to do that. A couple of things to keep in mind when you see a change in working capital, though, is if your inventory increases, if you buy a bunch of inventory, it obviously is going to reduce your cash flow. Is your accounts receivable increases, it reduces cash flow as it is recorded but not paid. Remember, it's not cash in hand yet. As accounts are payable, it's accrued expenses and unearned revenue, it increases your cash flow. So those are just a couple of things to keep in mind, because you're thinking I need to buy a bunch of inventory, but that messes up my cash flow. But if you can sell it, then eventually it'll help your cash flow. So there's a give or take there. Our next slide is just kind of reiterating just a couple of actions to consider. We talked about in the last couple of slides, just for the most part, we don't always think that there's a budge in our budget. It's funny, I always say that there's no budge in my budget, and especially as business owners, we don't want to spend money where we don't need to. So we want to make sure that we're doing what's right by our business. But this gives us some actions to consider that will be taken. Maybe it can, free up some wiggle room in our financials. If you look at your income statement, again, your profit and loss or P&L, as well as your balance sheet, and one of those industry standards, like to look at that kind of as a whole spread and put everything together and just do some analyzing, just to kind of take a look at where you're at. If you first consider pricing, where are you considered in comparison to your competitors? So where am I at pricing? Where's my competitors? And then is there any wiggle room for me? Certainly in a pandemic, you don't want to price hike, obviously, because people, can't afford it. But you should take a look at industry standards to see where you can compare to the benchmark, but also keep in mind your target audience. If you're a high-end company, you don't want to have dollar store prices, right? So it just depends on the kind of target audience when you're considering your price points, and whether you're comfortable where you're at. You certainly don't want to take a loss. Our next is cost of goods, or COGS. This includes all costs and expenses directly related to the production of goods. These are variable costs, such as labor, commissions, raw materials, and utilities. Consider management of your inventory also. Do you have too much inventory? If so, what can you do to turn it? Is being held for too long? Is it seasonal inventory? Is it expired? Will I make money having a sale? Those are all questions to ask yourself, what I can do with my cost of goods if I'm not doing a very good job in the COGS area. Also, is there too much money being spent on COGS? The next is fixed cost. This is taxes, leases, and salaries. A couple of actions to consider are, there's not really a lot of wiggle room when it's fixed costs, but maybe there's an expense that can be reduced, maybe renegotiating a lease, or perhaps the opposite end, maybe you actually have extra funds in your fixed cost to hire additional salaried employees. Maybe that's an option for you, but you won't know that until you do these calculations. Moving to our next action to consider, knowing your current and a projected cash flow position, which is what we've been talking about this entire presentation. We walked you through that. Do we know how long we can afford to make a profit and stay in business? That's huge. Is making sure that we are making enough profit to continue to stay in business. We don't want to just stay afloat. We want to make a profit. That's our goal, right? Does the net income and cash flow match? Remember that sending an invoice to a customer for a product or service creates revenue, not just when you send the invoice. However, what creates cash is when you actually collect the money. Again, we talked earlier about the cash in hand. That's what impacts your cash flow. The next action to consider is debt structure. What are your loans and lines of credit? Looking at short-term versus long-term. short-term debts such as credit cards and vehicle loans. They can be renegotiated. That's an option for you. Or how soon are they paid off to get them even off your books altogether? Are we on track to even make the payments? How about long-term debt, like your loans? Are we in position to refinance? That's something that we could do or consider for better terms. Sometimes if you've been in the loan for a long time, they'll consider refinancing. That could help your cash flow. If you don't have any of these, maybe like CJ said earlier, maybe you would benefit from securing a loan or even just a credit card or a line of credit to buy you some time and free up some cash for other things to pay off. And then you have that. Keep in mind that financials have to support the ability to pay back. I always make sure that clients have the ability to pay back. That's part of what we do at the SBDC as well, is we want to make sure that you're making a profit, because you can't request a loan if you're not making any money to pay it back. Lastly, and most importantly, we need to have a budget. This is a huge miss from a lot of people, from personal to business. If you don't have one, you need to get a budget. Not only does it help you stay on track financially, it helps you hold you accountable for your future goals. I'm sure each of you had a business plan, and you have to put a budget in the business plan. And if you're not going according to your budget or your business plan, that's no good. We have to, revisit our plan. Seeing your goals and written down does something different. I was telling one of my clients this yesterday, that seeing it written down, having it in your head is great, but having it written down in a business plan makes it real. And I know that all of you have heard different things about planning, but if you fail to plan, you're planning to fail. So we need to make sure that we put some plans in place, because a goal without a plan is only a dream. And I know that you guys have a lot of really great dreams, but as business owners, we need to make sure that we have a goal and it's written. And we do that through our budget and through the business plan. And we want to help you make your plans and set your goals. By being a business owner, it takes a lot of work, and we know that. But if you're not familiar with all of these terms and actions that we just reviewed, it's okay. Again, we're here to help. And we help you uncover the solutions and find gaps along the way. Thanks, CJ. We've discussed so far a lot. I keep laughing at the math part, but the math is what everybody's hesitant about, but that's important. And we have the tools that we need to calculate cash flow, how they relate to each other. That was kind of what our goal was. We also learned to spot the key indicators of both positive and negative trends. Now it's time to develop an action plan to track your results. The checklist is, image here is a checklist, is one of the tools we encourage you to use. This helps you revisit your cash flow and be a proactive financial leader of your business. This is a working document, just like your business plan. It's a working document that should be tracked however often you want to track it, but we suggest, weekly, monthly, quarterly, until you get more familiar with your financials. This sheet is broken down by categories. That list is ways to create cash flow that will be used to help your business grow. And ask yourself, where do I want to be in 6 months? Where do I want to be in a year? And then come up with the action steps to do that. And involve your team. Your team is on the front lines. Ask what they think their input could be too. I mean, you never know. Then the next thing is to describe the steps, how to carry out the initiative that is selected. Then schedule it out. You got to delegate too. If you don't schedule it out, you don't delegate who's supposed to do it, then nobody's going to do it. So we need to make sure we do those two things as well. And lastly, I'm going to reiterate that budget, because we need to make sure that we have a budget if there's a need for a budget in some of these tasks, if it's necessary.
So you see the importance of knowing your cash position. Earlier, I'd shown you some of the bells and whistles on the live plan, but perhaps you prefer Excel. Some people are not tech savvy. They don't want to do it. They just give me a spreadsheet. I'm good with a spreadsheet. Not that I encourage it all the time, but we do have these options. So we go to where you're comfortable and help you adapt, to your situation. So how about we just crank it up a notch and provide you a more manual tool that can assist you with the what ifs. This worksheet looks a little bit busy and maybe it's a bit intimidating, but the value it can bring to you in understanding your cash position is exceptional. how long you can sustain your business at its current cash flow rate. This worksheet allows you to test out those what ifs. We business funding analysts refer to it as the stress test. No, not because it stresses us out. Oh, okay, hold on. Sometimes it does. Let's be honest, sometimes it does. But because it allows us to place percentages of stress on your cash inflow, your revenue, what if your sales dropped in March by 5%, because of something bizarre like, I don't know, like a pandemic. Or on the positive side, you gained a new account in June that may increase your sales by 8%. This worksheet will show you the impact. This section is the cash outflows, and it consists of the different operating expenses, investments, or financing activities, as we mentioned earlier. Again, you can input a percentage of stress into these cells, and it will adapt it and show you kind of the cause and effect at that moment. As I show you these, because it is a very big sheet, and I had to do these little snippets out. So I, again, apologize because it's very small, probably on your screen. But the actual Excel format, very simple to use, and your advisor would help walk you through it anyhow. Let's see. So again, you can input the percentage of stress, either positive amounts, meaning that you're adding more expenses, or negative percentage, meaning that you're reducing your expenses. And this last section, it gets automatically filled in after you do the other two parts. And it'll give you a visual result of the what if scenario. It also has a recommendation down here at the bottom. It's on your cash balance, what you should be at and how much retained earnings, and that's the liquidity of your business. What your business needs to sustain during an unforeseen hardship. And all the numbers that are shown are on a cash basis. There's no accruals or non-cash items are considered. And the timing of cash receipts and disbursements is critical. So, how do the advisors at the Small Business Development Center support business owners and their cash flow? Well, we help you by reviewing your financials and connecting you with the resources to help you become the best financial leaders you can be for your business. And we will provide you with honest feedback. You don't need an echo chamber. We'll help you identify issues and opportunities, help you see if there are any trends going on that you should be concerned about. And then we're going to help you develop an action plan that can help overcome any obstacles and create a positive cash position. Sustainability planning, let's keep that in mind, okay? So that the next time an unforeseen issue arises, and it will, you and your livelihood can weather the storm better. At just a few clicks of a mouse, you can have an assigned advisor and a team of seasoned professionals available for co-counseling as your situation arises at no cost to you. Let me say that again, at no cost to you. Because we're partially funded by SBA and the colleges and ACA, all of these services are of no cost to our small business owners, and you can't beat it. That's all I can say. Why more people don't use this, I have no idea, but we're here for you.
There's so many things that business owners need to help with. Everyone is different, and maybe they don't know who to ask, but like CJ said, the Maricopa SBDC is here to help. One of my friends told me once, the only bad conversation is the one we didn't have. And so there's no stupid questions. So even if it's just a question or two, I encourage you to let the SBDC have a conversation with you. Keep in mind, we are working remotely due to the pandemic, but contact us at the website that CJ was just showing you how to get there. So we can have that conversation with you and see how we can help each other. and we look forward to partnering with everyone. And I hope that you guys understand now that cash flow management is important, and maybe have a couple of tools to add to your financial toolkit to be a financial leader of your business. If anybody has any questions, please put them in the Q&A. We have just about 5 minutes left, and we want to make sure that if we have any questions that we can answer them. And if there are lengthy questions or really more individual questions, please reach out to us. CJ and I both have our emails up on the screen. And again, if you request SBDC counseling and you would like to speak with either of us, there is a comment section that you have the ability to say, you know, I would like to speak to CJ, or I'd like to be assigned to Amber. So we would appreciate that. So if anybody has any questions, please put that in the Q&A. And I think Laura is helping us with that. And I want to thank Laura too. She is actually part of our team who has been very helpful, Laura Cerna. So I want to thank Laura too for helping CJ and I today. She's on the back and she does the background, and she doesn't always get kudos, but we want to help her or tell her thank you for helping us today.
Yes, she's our savior.
Thank you, Amber. We do have one question from Lori. She just wanted to say thank you for taking your time and that she would love some help. Again, Lori, if you would like to talk specifically to Amber and CJ, they provided their contact information. And if you would like some one-on-one counseling, please feel free to request that on using our online counseling form on our Maricopa SBDC website. And again, this presentation is being recorded and it will be posted on our website as well for future reference.
All right.
I don't see any other questions coming up in the Q&A or in the chat box.
All right. Well, thank you all again. We really appreciate you taking time out of your busy days, and we will see you soon.
Thank you so much.
Thank you all.
Bye.
I'm going to leave it open for just the last 3 minutes in case someone would like to request to unmute themselves and ask you any questions, CJ.
Okay.
It doesn't look like they will be. It looks like everyone has left, so I think we're good. All right,
All right.
CJ.
Thanks
Thanks everyone for coming. Bye.
Bye.